Good afternoon, everyone. Great to see you all coming in and joining us just now. And thank you, firstly, for taking time out of what is usually a busy time of the year for everyone to join us for today's Business Gateway panel webinar, where we'll be looking at what's changing in 2026. By the end of today's session, we hope that you'll have a good understanding of some of the important issues that may affect you and your business over the coming year. I'm Jamie Fowler. I'm the Customer Service and Partnerships Manager for the Business Gateway National Unit. And before I do a few of the introductions for the rest of our panel today, I'll just cover a few quick housekeeping tips for everyone. Just to say that as you joined the session today, you'll have been placed on mute. That's because today's session, as you can see from a quick look at the screen, is very busy, and it'll allow everyone to hear the panel as best we can. Today's session is also being recorded, and that recording will be available later on the Business Gateway YouTube page. You can still interact with us as we go through, and you'll see a comment from my colleague Sally, who's in the background working to administer the chat function at the side. So if you've got any comments or questions as we go, please put them in there and we'll do our best to answer them as we go. And lastly, I really hope that we don't have any IT issues or fire alarms or any other disruption like that. But if we do, you may see us quickly disappear before coming back on and joining from our phone, maybe from the car park. Hopefully not. Hopefully we'll all stay nice and dry inside for the duration. With that said, I'm delighted to be joined by the rest of today's panel, and I'll come very quickly to each of you to do a brief introduction and tell us a little bit about yourself. Aileen, if I can come to you first.
Hi, I'm Aileen McGowan. I'm a business advisor with HR specialism, as they call it, and I work across Business Gateway and Tayside, so supporting businesses in Perth, Kinross, Dundee and Angus. Prior to joining Business Gateway last year, I've spent about 33 years in industry, primarily all within sort of HR, operational HR. So using that experience to support businesses now through Business Gateway.
Fantastic. Thank you, Aileen. And Colin?
Hi there, I'm Colin McNally. My background started in Diageo, the drinks company, back in 1996 I joined them. I left in 2008 after being financial manager and controller for global IS projects. I am a qualified accountant, I do admit that every now and again. And for the last 17 years, we've been running an accountancy practice plus delivery of national and local frameworks across the Business Gateway enterprise network, including in the main a lot of financial related matters, and looking forward to this in terms of making tax digital.
Well, thank you very much, Colin. And Stacey?
Hi everyone, my name is Stacey Dingwall. I work at the Federation of Small Businesses in Scotland, where I head up our policy and external affairs work, so political engagement in Scotland is my bag for FSP.
Fantastic, Stacey. Thank you very much. And as I said earlier, hopefully by the end of today's session, we'll have covered quite a few different issues that at least we know for now are coming in the next year. I'm sure there's going to be a lot more that we can discuss too, and I'm sure each of you on the call will have other issues that you may want to raise. So just a reminder, please put those into the chat at the site and we'll try and pick those up. I think we just kind of briefly touched on a little bit of there. One of the big things that we see coming, or we know is coming in the next year, is the Making Tax Digital scheme. And Colin, I'll maybe come to you first, just around this with your finance and accountancy background, just saying, what are the biggest challenges that we see for businesses that face that transition to Making Tax Digital?
There's actually, can I start with positive? Here's I've got to start with positive in Making Tax Digital, and then I'll just get into my usual whine. There could be really good positives for business. What we find as accountants is that, see, once a business goes into basically delivering quarterly VAT, in terms of having to be forced into a routine of getting their bookkeeping right, getting their accounts right, getting their admin right every quarter, it can actually be really, really positive. Because basically every quarter you are near enough making sure you want to make sure your bookkeeping's up to date. And for many small businesses, that doesn't happen at the moment. And because what happens is, and I'm not saying in everyone, they end up in the scenario of January, 28th, taking that pile of bookkeeping and attempting to basically do a self-assessment and then shock horror, they owe the taxman money 24 hours later. And that probably says there's the benefit of it. We maybe get out of that routine. Hinted at basically where we're heading. We are probably heading to not just quarterly, but there's going to be 5 returns coming. And that literally starts, believe it or not, in less than 4 months' time. We are 4 months away from this. This is not something that is coming in the future. We'd all hoped and prayed that the last budget would change it. But no, if you are a landlord or a small business who basically is going to have a revenue, by the way, revenue, not profit, of over £50,000, as of 1st April, you will basically be included within Making Tax Digital going forward. And that's basically on a reducing basis over the next 2 or 3 years. So by the time it comes to 2028, you're basically going to be earning, if your turnover is £20,000. Now that's landlord and self-employed trade. So that doesn't include pensions, it doesn't include employment, it doesn't include any other income. And the only way to get round this, you will be chosen, I'm afraid, based on your last year's self-assessment. So here's the first problem we don't know. We actually don't know who's going to be in taking up that first caveat, that first cohort of basically who's going to be basically doing Making Tax Digital, because it's the government's going to invite you. By the way, sadly, it's not an RSVP. Sadly, you've been invited and you will do it. So there's the first problem. Nobody at this precise moment knows who is in that capture. But if you've basically, in your last year's self-assessment, had over £50,000 of income from those 2 income stream types, it's highly likely you're going to have to start from the 1st April. And that then basically just turns around and says, you really need to start looking at cloud accounting if you're not already doing it and using it right.
That's brilliant. Thanks very much, Colin. I think actually that brings on the next kind of question I was going to ask as well. I'm aware that record keeping is going to be absolutely crucial for this, and any tips or suggestions about what we can do to prepare for the digital reporting and record keeping that's going to be coming in along with this?
Yeah, I mean, there's a couple of things coming out of this. One is that we've always had to do accurate record keeping. I'm afraid, folks, that's been the rule of life since taxes began. But the move is now to being able to show that digitally. So, gone will be the days where people can just bring in a slip of paper and say, this is what my income is. There are various rules around what the minimum will be. So near enough have to start at near enough put the rules to one side. My view is, I'm afraid if you meet that criteria, or actually, if you're about to start a business and actually you're probably planning for that criteria, that 50,000 level, my advice is you need to start doing cloud accounting bookkeeping today, because they're looking for near enough transactional line level detail. Now, I'm not saying it's going that far, but it's pretty close to it. And in the end, if you're going to do cloud accounting, that's the only real way of doing it. You do it by transaction. So you're able to analyze your total turnover by type of sale and by client and customer in the same way your expenses. So I'm afraid, I think as an individual, as a business, you need to now grasp the fact that to get your bookkeeping to the standard that they wish, you're going to have to jump in cloud accounting from now on, utilising all the savings that comes with it. So in other words, the time saving of photographing and copying and using your camera to basically bring receipts in, to basically use the AI functionality for reconciliation of bank accounts, to drag your bank account in. So all the things that you're probably doing in paper that are taking time at the moment, I'll be honest, they're going to go away. So it's not always a negative thing, is what I'm saying as well.
Yeah, so hopefully from that, in terms of saving you time and certainly saving you trying to remember where you've put that receipt or that bit of paper from.
Oh, 100%.
So it'll save you that bit of time. I know that obviously there's work going on at the moment around different softwares, different programs that are in the background, different apps that people can potentially use for this. Any insight into which of those are looking useful at the moment, or?
Yeah, I mean, there's near enough a reality that says most of the main apps, so Xero, QuickBooks, Cashflow, basically Sage, Free Agent, are looking really, really good. They're already doing this. They've been doing it for payroll, CIS, real-time information, and VAT now for some of them 10 years at least. So they know what they're doing. They're delivering on that. So therefore, they're ready. Now, obviously, here's the annoying thing. I'm saying they're ready. We've never seen it working yet. We don't know how it works. So we're having to take their word for it. But at the same time, these guys have invested millions to do this. So any of the main apps that basically you know about are basically going to be MTD ready. And therefore, when you're looking at an app, have a look at it in terms of the functionality for your business, but it might be the fact it comes through your accountant, or it may even come through your bank, because without trying to sound like an advert here, there are definitely banks out there which will give you free access to software, basically as part of your kind of monthly fee or your startup account, etc. So find the one that's right for you. The one area where I'm not sure about is we are getting a lot of reporting capabilities out of some of the challenger banks, the Monzos of this world. But even Monzo now has basically said, well, actually, through Monzo, you can get free access to one of the softwares. These reporting tools are good. I don't think they're going to meet the need of MTD. So you're still going to end up, sorry, I'm laughing at Graham Minto's comment here, to be honest. I might change a couple of them about, Graham, but that's another conversation for another day. Definitely the first one is right. So yeah, there you go.
That's brilliant. Go on, thanks, Russ. So yeah, I think message out there, a reminder to everyone, if you have a look at the chat at the side, there are comments coming in there. My colleague Sally is putting in some very useful links as we go you can have a look at afterwards as well. And just in terms of, we obviously kind of said it'll be a bit of a time saver, and it's a big change in terms of how people are going to be reporting if you've been used to doing that one annual report. Is there any changes that people should be making in terms of behavior, in terms of their sort of financial planning, their cash flow? Is it just really trying to line up behind that quarterly approach now?
Yeah, I mean, the slight concern I've got is the fact that we are not 100% sure how this is going to work. We can, in principle, know. We kind of know the software works. So yeah, people are going to have to get out of a mindset which may have been ingrained into them for the last 20, 30 years. If you've been, I'm just making that, you're a skilled trade, or you're a mechanic, or and you're that used to basically kind of taking your year-end sets of books into your accountant at the end of the year, that's gone. The whole concept of that paperwork is gone. You will basically be the same as VAT. You will be given a date in which you must basically have this paperwork in. Now, they're saying they're not going to fine to begin with. They're not going to take any extracting tax office for the first quarters, etc., etc. There's only one way this is going to go. It's going to go in the same penalty type route that VAT does. So it is going to be a massive mind shift for somebody who has been that maybe sitting in that kind of older way of working of let's get the accounts in by the January type scenario and we'll know our tax. It's a completely different way of working on that, but it's also a different way of working at looking at your business, because going forward you will then be able to see your business day in, day out, seeing what's happening, seeing your bank account, see who owes you, chasing debt. So it's a much more proactive way, but let's be honest. I know we talk about the world being all digital and everybody's in digital, but the reality is there are many businesses there that are not. And there's the first massive challenge we've got. We've got masses of businesses out there who are not digitally ready. I could go on a rant here, actually, Jamie. I was near enough about to. There needs to be more support against basically putting digital support back into business at this moment in time, because I look around our clients in the accountancy business and they don't know. There's the bluntness. There's a little bit of stick your head in the sand and hope it'll go away, or I'll hand it to my bookkeeper. But here's the other problem, and sorry, I'll always end up with something cheery. Unfortunately, your bookkeeper or accountant ain't going to do this for nothing. And there's the other problem. Forget any message that's come out through the social media and the government about how little this is going to cost business. Your average business who currently basically hands in paperwork at the end of the year will basically be charged some hours bookkeeping and a self-assessment fee. Let's call it that. Going forward, they are going to have to have a full-blown package normally of some form of software. Now, even at the cheap end, you're probably talking £12, £14 a month. So there's 160, 180, £200 a year that they never paid before, because it was kind of hidden in the background. It was used once a year. You're going to then have to turn around and say, even if your bookkeeping's perfect, you're going to have to look at getting your bookkeeper to check your numbers every quarter and submit it. So even if it's only an hour, 2 hours, there's 2 hours times a rate, times 4, times 5. So you're already into the £300, £400, £500 level here, and you've got nothing out of it. And that's another thing that people need to be prepared that actually, sadly, if you're using external companies bookkeeping, there is a cost on this. And unfortunately, that needs to be built into pricing, it needs to be built in your models, and there's a whole range of things that comes on after that.
No, thank you very much, Colin. And I did think you were going to go and do a bit of a shameless plug for some of the other Business Gateway support webinars that are out there, because you're absolutely right. There does need to be that kind of more support around digital. We already, through Business Gateway, have got some very good webinars around business expenses, bookkeeping, financial management. So if you've not already been on those, I'd encourage everyone on the call to go and have a look.
My actual rant, without getting into the rant, Jamie, my actual rant was that basically I believe there's a massive need for more funding for digital upskilling. So there you go. That's where I was actually going to head, but I'll leave it at that.
Brilliant. Thank you very much, Colin. And in addition to, we know that Making Tax Digital is coming in. We've had the kind of messaging out from HMRC around that. One of the other big changes that we know is coming for businesses into the next year is around employment law. And Aileen, I'll maybe come to you just quickly for a few suggestions around what we're likely to see from sort of that day one when the rights come in.
Yeah, I'm so pleased to hear Colin say that you don't know 100% what's happening with Making Tax Digital. It is very much the same story with the Employment Rights Bill. We had hoped that it would become an act by this point, probably unlikely by the end of the year, just because Parliament will be going into recess. But most of it now, all the headline bits now, seem to be kind of getting bottomed out. There is still a lot of consultation. There will still be a lot of secondary consultations. So a lot of the nuts and bolts, we're still not absolutely clear on. I think probably just because it is the one that's captured most people's attention, it's been announced that the push for unfair dismissal to be a day one right is now going to be 6 months. That will come into force. I think until it becomes an act, we don't know for certain, but the indications are that that will come into force from the 1st of January 2027. So for employers, a key date to keep in mind is the 1st of July 2026, because anybody that's been employed since 1st of July 2026 will benefit from that day one right. And it shouldn't really scare employers, because you shouldn't really be dismissing people unfairly. But what you do need to look at is your sort of probation periods. Are they in line with that? How you manage those probation periods. If you have got somebody that has started with your business and they're maybe not performing to your expectation, actually don't be scared about having that conversation. It could just be that they're misaligned, they're not maybe understanding fully. Help support them through that process. However, I'm sure lots of people on the call will know sometimes people just don't meet that expectation. You have to manage that. A lot of employers are scared to kind of go down that. You have to manage that. You do that fairly and with respect to the individual. And that process will become really quite important. The days of you at the end of the probationary period, having never talked to the employee before, you just tell them, I'm sorry, you've not passed, therefore you're dismissed, will be going. That approach just probably will not make it anymore. There will have to be at least what they call a light touch, sort of disciplinary or performance type process we'll have to get through. So that announcement sort of came out. It was a U-turn. I would have to say the Employment Lawyers Association at the beginning of the year did not feel that that U-turn would come on day one rights, but it has. And it does give employers just that little bit more time to make sure somebody is going to fit with the business and actually for the individual. It kind of works both ways. It isn't just purely a benefit for employers, but it was one that really wasn't sitting well as the Employment Rights Bill was going through the course. The other kind of key one is 0 hours. That was another one which, yes, they did do a U-turn. It was going to be a complete ban. That's not going to be the case, but there will be other criteria on how employers will have to treat those that are on 0 hours contract, including guaranteed hours. And this is where we're still waiting for some of the nuts and bolts. What does that look like? What reference period do we have to look at? So that potentially, I don't think will come until later 2027, but we're not 100% sure. We're still waiting for some further information on that. Other ones, though, looking at April 2026, because as Colin rightly said, that really isn't that far away. Day one rights that will come into force are for paternity leave and unpaid parental leave. Now, with unpaid parental leave, don't confuse that with time off for dependents. They are two different types of leave. Time off for dependents is, it could be any dependent, it could be an elderly relative, if you're responsible for caring for them, it could be a child, partner, spouse. And generally it's 1 or 2 days. It is unpaid, and it's usually to allow time to make other arrangements if something has happened. It could be suddenly if the nursery closes, or, there's lots of different scenarios, but it's very much short term, usually 1 or 2 days. Whereas unpaid parental leave, or it's sometimes called ordinary parental leave, currently people can't sort of get access to this until they've got 1 year service. So from April 2026, that will be a day one right. So the minute an employee starts, they will be entitled to unpaid parental leave. Now, this type of leave is for anybody that has got parental responsibilities for a child. And a child in this case is somebody under the age of 18. The leave is unpaid, but it is actually quite significant. They can have up to 18 weeks of unpaid leave for each child, subject to a maximum of 4 per child in any 1 year. So if somebody, say, had 3 children, they could actually have up to 12 weeks unpaid leave in a year. So looking at your workforce planning, that type of leave, it is unpaid. So it's kind of weighing, it's like most things in business, including HR, it is risk-based. You have to look at the type of workforce you have. What is the sort of ratio chance of that happening, and how many of your workforce would fall into that category? The leave blocks for unpaid parental leave must be taken in at least 1 week at a time, so they can't just take random days, unless the child or they've got responsibility for is disabled, in which case then often 1 or 2 days at a time. I see a question has popped up. Would holidays accrue within the time off? Absolutely, they would accrue. Paternity leave is different. Currently, they have to have 20 weeks service. So that service, continuity of service test, is being removed. So from April 2026, again, this becomes a day one right. So it actually widens the pool. So it would include anybody that's on probation, agency workers, anything like that. Actually, sorry, not agency workers, but anybody that's on probation, they would have that as a day one right. Uptake historically in the UK for paternity leave, it has been known to be really low. Quite often it's due, it is a statutory payment, it is a recoverable cost, but currently that is £187.18 or 90% of your average weekly wage, whichever is lower. And quite often we find that, that the individual would actually rather take holidays, because obviously, particularly if the mother of the child is on maternity leave, again, that's a statutory payment. And with the cost of living, the paternity pay doesn't always meet the needs of the family unit at that time. So it will be interesting to see if this improves the uptake of paternity leave. As I say, it will widen the pool that it's available to. But you do need to make sure that you're looking at what we call your family-friendly policies, making sure that they're updated to reflect these changes as a day one right. Make sure if you have different line managers that are maybe managing people responsible for it, that they're also aware that it's a day one right. So, just having a look. For smaller employers, both the unpaid parental leave and the paternity leave probably has a bigger impact, purely because the workforce is smaller. So if one single employee is off, say, and you've got 10, that is 10% of your workforce. It can have an impact on new starters if they get it from day one. Will they, if they take time off, what does that do to their onboarding procedures? So just having a look at what you do, policies and procedures, and making sure that you kind of covered off for the potential that you could have more people and disruption to your workforce.
That's a huge one to take in. And I think it's incredibly detailed. I think, I'm sure everyone's been, like I've been doing, kind of scribbling down as fast as we can to keep track of that. I think the important thing is, as we said, this is our best knowledge at the moment about what's coming out, may change. So just a reminder, please keep in touch with Business Gateway, keep in touch if you've got a business advisor, keep in touch with them. But also I think probably key, think about your staff management, your staff planning, and your kind of future planning and organisation around that. And I think there was a comment in from Jane earlier on as well about an induction process. I think in terms of the sort of day one dismissal rights, yeah, absolutely. Key to make sure you've got that in place so that you, again, trying to prevent yourself further costs of having to go back out and recruit again, which is always a bit of hassle.
Costly.
Exactly, and costly. Yeah. I think another kind of linked question to kind of that, and probably going a bit more into detail as well, is that I'm just going to ask, what do employers need to know around the kind of removal of the earnings limit and waiting period for statutory sick pay? Because we did start touching a little bit on the kind of days accrued for holidays and things like that as well.
So yes, so again, this is a change that will come in from April 2026. Statutory sick pay will also become a day one right, and they are removing what we call the lower earnings limit. What the predict will do will mean around about 1.3 million extra workers and employees will actually get access to statutory sick pay. The day one rights means if somebody's off on one day, currently they have to wait to day 3 so that there is no payment until day 4. And then statutory sick pay will kick in. There is criteria, sort of earnings criteria. You must earn on an average £125 a week. These will stay, or it could be 80% of their weekly wage or lower. So again, more people will fall into that pool for qualifying for statutory sick pay. Statutory sick pay is not a recoverable cost, so this is a cost to businesses. And I think for smaller businesses, I think really for any business, this is one where you really need to make sure that you've got your sickness absence recording done correctly, because statutory sick pay and sickness will then trigger from day one. Make sure that line managers, anybody responsible for managing people, is aware that it is really important because they're entitled to that payment. And as I say, it will be interesting to see, because even it will now take into account agency workers, casual workers, anybody that's on 0 hours, they will all be eligible from day one. So whereby their working pattern might have previously excluded them for it, it will trigger more SSP cases for sure. The interesting, or a point of note, is through the Employment Rights Bill, there is going to be a new executive agency created called the Fair Work Agency. And the Fair Work Agency will handle the remit of issuing notices for anybody who doesn't meet the requirements. So I'm not going to the Fair Work Agency because that's another huge topic, but they will be a new executive agency that will replace 2 executives. I think things to be doing now in preparation, look at your contracts historically, because employment law has not really had any changes in about 30 years. Contracts will be quite sort of specific on what SSP. It usually goes into all of the details within a contract clause. So you may need to look at your contracts of employment and update those. make sure you look at your sick policy and absolutely make sure that you've not only got a sick policy, but you have a short-term sickness absence management procedure, so you know how you're going to manage your sickness absence moving forward. Short-term sickness absence is anything up to 28 days.
Brilliant. Thank you very much. And that's really, really helpful. And
on that.
again, just reminding everyone, make sure you go and you review the contract, see what you've got in place, and just make sure you're aware of these changes that are going to be coming in. I think there's another couple of kind of changes that certainly kind of hit the headlines, and people have been kind of asking kind of questions about them around the whistleblower protections that are potentially coming in, and the reporting procedures as well. Again, is there anything that businesses should be doing in terms of practical steps around those?
Yes. So, I mean, the whistleblowing, again, from the kind of main thing from an employment perspective from April 2026, there are currently 6 categories. So whistleblowing is different to raising a grievance. It's not about, maybe there's been some employee relations issues and they'll raise a grievance. It is where there is wrongdoing, where they see an employer or somebody doing some wrongdoing, but it has got to currently fit within 6 kind of categories for it to become a protected disclosure or qualified to become a protected disclosure. There's lots of kind of legal terms through the whole of the whistleblowing or the Public Disclosure Intent Act. And these are sort of, if there's a criminal offence, failure to comply with a legal obligation, miscarriage of justice, risk to health and safety, damage to the environment, or an attempt to cover up. So really there has got to be a public interest in reporting this wrongdoing. But under the Employment Rights Bill, they're also adding sexual harassment to that list. Now, currently, it isn't really a major change because sometimes they manage to fit the sexual harassment into one of those 6 categories, but it will have a category all of its own. And what whistleblowing does is it means that if anybody raises a protected disclosure, and it has got to be to the right responsible persons, whether that's their employer, could be HMRC, it could be the police, depending on what the activity is, they cannot suffer any detriment. Now, one thing to remember too is they don't have to prove the wrongdoing. They just have to feel that it's either occurred, is likely to occur, or it is actually occurring at the time for them to be able to raise it. They don't actually have to go and prove anything. And it will mean that they can't be treated with any sort of detriment, or any retaliation. So it gives further strengthening. And the Employment Rights Bill, the whole way through, and actually since October 2024, there has been a real tightening up on sexual harassment and what employers have got to do to protect their employees. One thing to remember with whistleblowing, it isn't just employees, it can be ex-employees, it can be freelancers, it can be executive or non-executive directors. The legal meaning of employee is strong within that act is within the Employment Rights Act. So again, with the Employment Rights Bill, there's a lot of administrative burden, which does cost. I mean, time costs money. You need to look at your whistleblowing policies, need to look at your sort of maybe sexual harassment or your harassment and bullying policies, and make sure that these are all up to date. With whistleblowing as well, if you have got any non-disclosure agreements or confidentiality clauses or anything that's going to limit somebody's ability to blow the whistle, then you would need to review those and have them updated. You can't prevent somebody from doing that.
I think, yeah, again, absolutely right. There's some really important features there that people would need to kind of be able to report on if something was happening. Again, kind of mentioned they need to kind of go back and review. And there's a kind of question in from Margaret in the chat, which I had a quick scan over. I think it's quite a long question, Margaret, but I'm hopefully doing it justice. And the key thing from that is kind of saying, does the new legislation, if it comes into force, alter existing contracts of employment for existing employees? Is that something that people are going to go back and do? And how was?
Yes, so my advice would be to review your contracts. because there could be several clauses. The statutory sick pay, for one, I certainly know for a lot of clients that I've been speaking to, they are quite specific in how statutory sick pay works, and they split out the waiting days and everything. So that clause would need to, you can either do a variation letter, but this is where you really need to audit your contract to see how many clauses are affected by the upcoming changes. Sometimes it's easier just to issue a new contract, which you can do, and that contract would be, say it was from today, the 9th of December, it's the continuous date of employment that's important, so you reflect actually that within the contract. Other changes that we're not too sure about, so there could be quite a bit in contracts that maybe need to be updated, is with the Employment Rights Bill, a lot of repealing of trade union laws and acts. And one of the things that will come into force is, at the moment, usually in contracts, unless you recognise a union, it says there's no collective agreements associated to this contract. A lot of people glance over that. They don't really totally understand it, and that's okay. There will be a requirement for employers, once the Employment Rights Bill becomes an act, to inform their employees of the right to join a union. Now, what we don't know is it okay just to put that into a clause in the contract? Do we have to write to them annually? But we will have to make sure employees are informed of their right to join a union. So in short, Margaret, I would say audit your contracts. Definitely from April, the whistleblowing, the sick pay, paternity and unpaid parental leave are all going to become day one rights. Certainly focus on that. But there could potentially be other changes coming, and we might need to go into those at a later date.
Brilliant, Aileen. Thank you very much for that. And actually, Stacey, I'm about to come to you with a kind of another question, but before that, I saw Jane had kind of very helpfully put into the chat asking, if the FSB, who have a fantastic set of resources in terms of template documents, if you're going to be making changes to the kind of policies and contracts in there, which I suspect you probably will be doing that and reviewing those.
Yeah, hello, thanks, Jamie. Yes, that was, I feel less guilty about making a shameless plug than for FSB's resources, since someone has asked. Yes, definitely. We will be making the changes to reflect so that our members have access to all the updated templates and guidance before this legislation comes in. And in terms actually of making tax digital as well, if you are an FSB member, there is actually a software solution that you can access through your membership. Because our research with members find that is one of those cases where a small business is pretty much like a domestic consumer in terms of navigating the software providers, in terms of their ability to negotiate pricing, etc. About the last time we asked earlier this year, about almost 3 in 10 of respondents to our survey told us that they didn't know yet when they would make the move to MTD software. So if you are a member, there is a ready-made solution for you there as well. In terms of the Employment Rights Bill, we've lobbied government quite hard to make those changes that's been mentioned around pushing it back to 6 months instead of day one in terms of dismissal, the 0-hour contracts as well, because it's you can understand why they would want to make those changes, but I think the reality for small businesses is that those things just wouldn't have been workable, particularly in terms of other things that we've seen this year in terms of the cost of employing someone with the increase to NICS contributions. It all just kind of adds up, and we were starting to see impacts on our members' recruiting intentions, to be honest, which isn't good in terms of the levels of economic inactivity that we have. So yes, we'll update the guidance. We're also continuing to lobby around the statutory sick pay and reintroducing that rebate that you may remember small employers used to get in terms of the sick pay. So we are continuing to lobby the government to bring that back in as well. But we'll see where we are come 1st of April next year. What a big day that's going to be.
It certainly is, yeah. I think actually it's a very kind of good point. What we've heard so far, changes coming from making tax digital, changes coming from employment law, quite a lot of regulatory changes coming in that businesses are going to need to deal with. And I think one of the kind of questions I have is really, what can we sort of suggest in terms of SMEs and what actions can they take to stay competitive amongst, the new regulations coming in, increasing complexity from that side, and at the same time, as we heard from Making Tax Digital, that sort of rising digital transformation as well. Any suggestions you think we can make in terms of that, Stacey?
Yeah, I guess to flip it on the other side, I think there's things that governments can do to make it a bit easier for small businesses, appreciating the burden the burden that they already have, and then the increased burden that's on the way as well. So certainly in terms of making tax digital, we're asking them to potentially look at introducing regulation, which means that, price increases to software would be limited for the smallest of businesses. We certainly know from surveying our members that getting in touch with HMRC remains a significant problem. Over half of them last time we surveyed them said that they were having trouble getting in touch with HMRC and getting their issue resolved quickly. And all of that means they're taking time out of the business. Time they could be working on the business means that they're having to negotiate with HMRC and get it kind of resolved. So we're certainly continuing to push on HMRC to do what they can in terms of improving customer service levels, maybe getting more agents in there that are able to speed up the amount of time it takes small employers to deal with them.
No, that's really useful. Thanks, Stacey. I think, it's the time it takes to kind of deal with these things is obviously going to be a cost for businesses and a resource cost for businesses that they have to kind of deal with. I was just going to kind of ask, kind of following on from that, are there any kind of other risks that you think businesses should be looking to prepare for in 2026? And we can think kind of wider, not just from some of these regulatory changes, but from, changes to the supply chain, the volatility in that. I mean, I think we can assume that costs are going to keep increasing over the next year in terms of energy, materials coming in. And as we've seen this year as well, there's been quite, very significant cyber attacks on, not just SMEs, but very large businesses as well. Any other kind of risks in there you think businesses should be taking action now to sort of prepare for?
Yeah, Dev. So one, obviously, we've just gone through one budget last week or the week before, and now we've got another one coming up, the Scottish one, in mid-January as well. And I think the most significant thing that we're keeping an eye on at the moment, particularly for those small businesses that have got premises, you've probably already received your draft rateable value ahead of the business rates revaluation next year. So unfortunately, we're starting to hear from members who are having a 50 up to beyond 100% increase in their rateable value, which will take a lot of businesses out of receiving that small business bonus scheme relief. Speaking to a bookshop in Edinburgh earlier today, his rateable value is going from about 10 grand up to 15, which means he's going to lose that 100% relief and will now drop down to about 25% relief max as well. So we're really working across our membership to gather evidence and understand the scale of this, because it's going to be the Scottish budget where ministers could potentially make changes to the business rate scheme, whether that's the thresholds for eligibility for a small business bonus scheme. 3 years ago, we saw them take down the threshold, so fewer people were eligible for that relief. So, if the rateable values are taking more and more businesses out of it, we're really going to need to see them change those thresholds again. Looking at things like the multiplier or the poundage, as it's sometimes called, which is what they use to calculate the rates bill for someone. We've seen some changes made in England there at the budget in terms of introducing a new rate for retail, hospitality and leisure businesses, which I'm sure we all know faced particular challenges in the last 5 years. And Wales have followed suit by introducing a reduced multiplier for retail businesses as well. So in Scotland, we still just have the one multiplier for small businesses. But again, we're really pushing on the Scottish Government to change tack there and recognise the scale of the challenges that different sectors are facing as well. So that's going to be a big focus for us going into the new year. Something positive that's coming forward, as you may have heard, of the community wealth building legislation that the Scottish Government's bringing forward. We've been doing a lot of work with them in terms of pushing them to introduce a requirement for local authorities within these action plans to set a target for increasing the spend with small and micro businesses locally, so that we're keeping more of that wealth, that spend within communities, circulating around, letting small businesses employ people from the community. So that's a really positive thing that we're hoping to see come through in early 2026. And then I guess once we're through the spring, where we've all got the May elections to look forward to as well. So yeah, risks, challenges, opportunities in terms of what the makeup of the next Scottish Parliament might look like, I think is going to be a big one for all of us.
To be honest, I think we've done very well. We've got to 1:15 without managing to mention next year. That's not bad. No, thank you. Thank you very much, Stacey. There is a huge amount to kind of take in there. And I think we're probably getting to the kind of stage of the call where we're maybe we're probably less sure about some of the certain things that are coming now. We're maybe looking a little bit more into the sort of crystal ball about what's coming in the future next year that we might think. Obviously, the election is going to be happening. We do know that's going to be in place. We did touch on the fact that we've seen, the increased digital technology. Obviously, over this year, we've seen AI become a really kind of a key feature for a lot of businesses and for a lot of individuals. I think we suspect that may continue into the next year. Are there any other ways in which you can see sort of AI or kind of automation coming in that businesses could make use of, or any kind of risks around kind of making use of those? And Stacey, this is to you, but by all means, Colin, Aileen, feel free to chip in as well.
Yeah, I guess, across our membership is very broad. We've got people who AI is their business. They're doing a lot with it. They're offering solutions to other businesses, other agencies as well. So it's very much their bread and butter. They understand it. They know the opportunities as well as the risks. I think probably for the majority of our membership, and pretty much, I guess, like the general public, it's a bit of a fear of the unknown, isn't it? It's, this could help you, and, it can automate things, but you're also a bit hesitant about, what's happening to your data. We talked about kind of the cyber risk as well. What's happening to your data when you ask ChatGPT what you should have for dinner that evening, or more business related questions. I think it's just understanding and navigating that landscape of exactly how it can be helpful rather than a risk to your business. I know the Scottish Government have got a new kind of policy and initiative, boldly called AI Scotland. Must have took them ages to think up that one, which I know they've put a bit of money behind, I think £1 million initially. So there's grants available for small businesses there who are thinking about some AI adoption in their business, which is a great place to start. And we're kind of pushing on that to ramp it up a bit more, because I think it's, you talked about, the different resources that the Business Gateway have, that kind of digital support. It's definitely that businesses need in order to be able to navigate that landscape.
Brilliant. Thanks, Stacey. And actually, just importantly, just on the cybersecurity side, just to point out, we did mention there's also been a couple of very high-profile cases in the news over this year. Obviously, Jaguar Land Rover, really incredibly damaging for their business. In the chat at the side, my colleague Sally just posted a link to the Cyber Essentials scheme that's run by kind of UK government, the Cyber Resilience Centre there. Some really useful tips within that. So please, if you haven't already, have a look at that and think about what you can do to take some of those practical steps to protect your business and to protect your customers as we go into the new year. And unfortunately, we do know that this time of year, actually, cyber phishing attacks, cyber attacks tend to spike, actually, because they're aware that businesses may be a little bit quieter. You might have fewer staff over the kind of Christmas period as well. So just one to be aware of, and maybe take some steps there to protect yourselves.
I mean, it's definitely, Jamie, one of the areas where I would say, when I'm looking at my forecast of risk and ops for the next 6 months, cyber security. I mean, we're Cyber Essential accredited, and I'll be honest, I think the tightening of the rules for Cyber Essentials between now and the next time we do it, I think is going to be much tighter. And I think the other thing which I notice as I've been doing a little bit more research into Cyber Essentials as I prepare for my next accreditation, they are looking much, much harder down the supply chain. Now, that means that many businesses who think they are not involved in Cyber Essentials or don't need to worry about that side of it, they may end up getting a bit like tax, getting drawn into it because they're a supplier to a supplier to a supplier who must make sure that the supply chain's good. So one of the other areas is definitely to focus in on that Cyber Essentials piece, and if a business needs that, not just for the obvious, the cyber protection, but actually you may need it for contracts going forward, and it's going to become really, really important, along with other aspects that were talked about today.
I think that's a really good point, Colin. I think, again, we did mention with community wealth building coming in next year, local authorities are going to be having to look at spending more locally with kind of more local businesses. But in the world of local authority procurement, we have got a lot of rules and regulations around what needs to be in place there. And I suspect, again, cyber security, again, if you're going to be working with vulnerable customers that local authorities potentially work with, data protection, compliance with GDPR is absolutely key. So I would imagine that'll be almost like a key condition for a lot of public sector contracts if you're looking at those in future as well. conscious we've got about 10 minutes left. I've got a couple more questions, and if you have got any kind of questions, if you want to put those into the chat just now, we'll do our best to try and answer them and try and gaze into the future and figure out what next year might look like. One of the kind of questions that I did have as well is just from your own experience and from the types of businesses that you're seeing at the moment. Are there any particular trends that you're seeing coming through, or industries, sectors, or types of new businesses or activities that you think might pick up over the next 12 months? I'll open that to anyone who thinks they may have an answer. We have kind of touched on, I think Stacey, you're saying obviously we've seen, customers that have come through yourself, members that have come through yourself that are, AI businesses. A lot of that's increased over the last year. Any other particular groups that you're seeing coming through, or industries you think we might see in the next 12 months?
Jamie, I'm going to go back right to basics here and actually go to the flip side of AI. I'm not saying AI isn't used, but I mean, we're still seeing that flow of construction, trade, professional electrician, etc., that side of it coming through the system. There is still a massive demand's outstripping supply type scenario in terms of that side of it. So I still say, even though the construction, depending on which paper you read or which news article you read, is in difficulty, there is still near enough the demand is there. It's just whether or not we can keep going with the supply, if you know what I mean. So I would still say basically back to bricks and mortar, I'm afraid.
No, that's a really interesting point. And again, Stacey, you kind of mentioned the point. Obviously, there are changes coming to the rateable value for premises. We know that I think across the country, we still see a lot of empty premises within our towns, our cities, our high streets, and there's that sort of changing approach at the moment from being very dominated by retail. You're starting to see more kind of mixed use coming in for some of those premises, different types of business coming into those that aren't just shops or retailers. There may be, they're doing more kind of experience things. So there's a lot of kind of change in that space as well. Anything you're kind of seeing from your members, Stacey?
Yeah. Definitely, I was going to say we're actually seeing quite a lot of HR consultancy as well, which is probably unsurprisingly given what we've talked about this morning. But yeah, no, that experience market is such a big one, isn't it? I think for all of us. Now we have a lot of members, doing things like escape rooms, a lot of things like, the kind of the darts. Those experiences are very popular as well. And in terms of the rateable value and kind of getting into the city centre, those are the ones that we need a change to make that process a lot more smooth for them, because it takes them a long time to actually open up that business once they've got, whether it's change of use, finding somewhere that's got a kind of reasonable enough rent, rateable value, rates bills, all that kind of thing. Unfortunately, it puts people off when they've got this great idea. They're put off once they get into it. So yeah, let's do what we can to make it easier for them.
Absolutely, Stacey. And again, just shameless self-plug for Business Gateway, but by all means, please come back and speak to us. The webinars are fantastic. But if you have got questions, you can contact our contact centre, and you can also get in touch with your local authority, local Business Gateway, in terms of speaking to a business advisor there as well. A couple of quick questions that have come into the chat. I think, Margaret, you may have asked this one earlier, and I think Aileen did answer it, but just on the new legislation coming in for employment in terms of creating this sort of two-tier employment contract situation for pre-existing contracts and existing employees. Is that the one, Aileen, I think we're saying go back and review your existing contracts and make sure they're up to date?
Yeah, so it won't be two-tier. Once the legislation comes in, it replaces the old legislation, so it's the same for all employees, ones that have been with you for a while, and anybody new that comes in.
That's brilliant. Thanks, Aileen. And there's one just on the sort of making tax digital side from Hannah in the chat there, Colin, just saying it's a brand new business this year, quite worried about making tax digital coming in, and currently using Tide, but does she also need to use Xero, for example, as a kind of additional software? Seeing that seems a bit like duplication. What's your advice around that?
Yeah, we need to go and just check exactly what Tide can do. The problem with any app associated with a bank account is that it will give you an element of what can be delivered. It's not giving you what probably is the full use of the likes of Xero or Sage or anything like that. So it's not giving you true management accountancy. So could it be okay for the smallest of businesses? But once you even start to grow, it's never really going to meet the need, Jamie. So therefore, from a I know it's great because it's possibly free, but unfortunately, doesn't always deliver the benefit it should give. So it is great if that's what you're using. At least it's something. I'll be honest. Once you're hitting the £50,000 turnover level, I'm not convinced that using the tools that are tied is maybe exactly the way to go. You should maybe be looking for something that's slightly more sophisticated.
No, that's really helpful. Thanks, Colin. I see there's a couple of comments just into the chat just now saying, can we get an email with all the links and the recording? Just to make it clear, we will be sending out an email to everyone with the links that we've mentioned in the chat and the recording that will be there. Another quite important one actually that I just spotted in from Thomas at the side is saying, do you have to have an invoice for all the money coming in? He's given the example, getting some income from a kids' art club, maybe from other sources. And am I right in saying, Colin, that in terms of the way that Making Tax Digital works, you might have to do separate reporting according to the income streams? Is that correct?
Yeah, so they've basically put a range of basics in that. But if you kind of take across a range of incomes, what they're near enough looking for is a transactional level process. So if you run a till, that till receipt, that Z, the old Z of the till will be quite adequate. But then again, these days, your till could potentially be feeding on a daily basis into your zero accounting platform. If you you're physically doing courses, etc., at a minimum, you're going to have to make sure that for that piece of work, you have recorded the income and where that income came from. And as far as I believe, there would be a minimum to put at least that one line item in. So in other words, you don't need to be every single person that attended, but at least for that piece of work, for that one day, you would be able to put income, etc. So yeah, there's a couple of bits that literally are still to be agreed, but basically the lowest level you can get to is really where you need to be, I'm afraid. Sadly, there are very limited shortcuts.
Thanks, Colin. I know that's not potentially the kind of news that everyone kind of wanted to hear, but
Sorry.
you need to be aware of that. It's something that you need to be prepared for. And again, just a reminder, we've just got a couple of kind of minutes left just to say that ask for help, ask for support if you're not sure. Use the resources that Stacey and her colleagues at the Federation of Small Businesses in. And I know I've seen one of your colleagues putting some of the links to those resources in the chat already, Stacey. Look at the Business Gateway website, speak to your Business Gateway advisor, look at the kind of webinar resources that we have coming out for everyone. We will be doing more information around employment law, around Making Tax Digital as we go. Good question from Margaret just at the end there, Colin. Just do we still need accountants?
Still going to need a human aspect. There's human. No, a lot of the stuff that we are basically the old-fashioned bookkeeping style, the old-fashioned ledger accounting is going to be replaced by AI. So literally, it's back to the added value side, the human interaction, the human analysis, which AI just cannot do. You cannot replace. You can try and replace, but you cannot replace some of that gut instinct, that years experience, etc., with machine learning, I'm afraid. So no, there will definitely be a change in the whole accountancy and bookkeeping side. 100% agree.
Just very quick, I see that Jean Kelly just kind of put a very quick question in around the employment law and how it might change funded positions within charities. Aileen, any kind of suggestion for that? Is that one maybe to maybe speak to an advisor, maybe have a bit more of an understanding about what could potentially happen?
Sorry, my sound just dropped out there a bit. Sorry, Jamie. In relation to...
It's a quick question in the chat about how employment bill changes will affect funded positions within charities. Any suggestion, or is that one to maybe have a chat with an advisor around?
I would say have a chat with an advisor around. It could be depending, because within Business Gateway ourselves, we have got funded positions as such. It could be that it needs to be a fixed term contract. You can still have fixed term contracts, but again, if you're going to end it before the end of that fixed term, you need to follow a proper process. So I would certainly have a discussion with an advisor. It depends if it's a bit more of an ad hoc type funding, what is the best route of contracting with that individual?
Brilliant. Thanks very much, Aileen. And we are just about out of time. Just a last moment for you to point out that we will be sending out an email with the recording and with a lot of the useful links that we've put into the chat today. There's also a feedback code in there, and by all means, please get in touch with us. Let us know what you thought of today's session. Give us suggestions for what you'd like to see in future sessions as well. And I'd like to all just to join me in thanking our panel very much for their time today. Thank you, Aileen. Thank you, Colin. Casey, delightful talking to you. Insightful. And thank you to everyone that's joined for your time today. And we hope you all have a very good Christmas and holiday period. And we look to see you back in 2026.